Evaluating a growth stock can be tricky. In this video, we'll talk about some important things you should consider when doing your stock analysis. The first question we should answer about growth stocks is, what is a growth stock? A growth stock could be defined as a stock that has potential to grow at a rate faster than the broader market. While it's not possible to see the future and know for sure which companies are likely to grow faster than the market, there are a few things we can look at to help us try to spot some potential opportunities. Growth stocks generally have a few common characteristics. Number one, they have a high rate of revenue growth. That revenue may not be translating into profitability yet, but for growth stocks, that may not be a huge issue. For example, net losses may be temporary due to startup costs or a business reinvesting in itself instead of taking profit. If, however, revenue growth slows down and the company continues to lose money, it could be a sign of weakness in the company. Number two, management team. While it's difficult to quantify the quality of management, there's a couple of key things that we can look at. First, how long has the management team been around? Do they have a track record of success in the past? Second, how is the management team compensated? While stock options for executives sound in theory like a good way to incentivize a company to maximize stock price growth, it can sometimes lead to poor long-term decision-making to try to drive up a stock in the short term so that those executive compensation options can be cashed. Insider stock buying by management could be a good sign, as company insiders should in theory have a good idea of what the company is doing. Number three, what are the long-term plans for the company? And do they offer quality products or services? How large is the market for those products or services? Is the market demand large enough to justify the growth story? For example, in 2020, the decriminalization and legal sale of cannabis gained momentum in the United States. A lot of companies built up around that industry seemed positioned for huge potential growth, and their stock prices increased to reflect that. Unfortunately for investors who still hold those stocks, it appears that as of the recording of this video, the growth story has not played out the way that investors anticipated, and cannabis stocks have slumped dramatically. So far, market demand has not held up to expectations. Number four, economic moats. Proprietary technology, size advantage, cost advantage, supply advantages, brand loyalty, and other characteristics unique to a company can create economic moats that protect a business from competition. Does the stock you are considering an investment in have any economic moats, anything to differentiate it from the competition? Number five, value. Now, it may seem strange to bring up the word value when talking about growth stocks, but risk-adjusted returns always have a value component. Are you sure you're getting the best bang for your buck by investing in that particular company? Evaluating a growth stock is not as simple as just looking at a bunch of metrics and saying yes or no. It involves market research, sector research, and individual company research that may not always be quantifiable. Remember, the most important thing when considering any investment, no matter what type it is to just make sure you control your risk properly.